Yes, okay, good morning. Good morning, everyone. I think it's 10:15 on my side. It's the 27th of October. The month is about to close, and we are back for another recap video on how we performed last week. So, this week has been amazing. This week has been amazing if you followed my analysis. It has been amazing. So, first and foremost, you're going into this and you're diving in with one of the pairs we had moved on from the previous week's analysis to this week, and it came to that is the British pound versus the Japanese yen. Yeah, so this is going to be quick. This video is going to be quick, as we can see. Yeah, the same analysis, because the last time we were going to have a breakout around here, and we placed our buy stop there, but then the market didn't trigger. It came back to the range, but then we kept it because we saw momentum kept building up, and we're seeing a great push out. Yeah, so as I had analyzed again and kept my analysis for this week, when the push out happened and I waited for a retest back into the same zone, you see what happened, because these are the zones I'd marked out for the hourly versus the weekly. So when it broke out and came back for a retest, and I saw a very big push in momentum, even if you went to the lower time frames, you can see there was a lot of build up, volume build up to then the pair itself busting out. So what happened was, when it reached my average risk reward ratio, I first moved the trade to break even. That's the white line again, you see. But then again, once it touched my zone and it broke out, because I remember when I broke down to a lower time frame, I saw a lot of consolidation there. I don't know if you can see that again. Sorry, switching to the yes, when it broke out and I saw a lot of consolidation. Remember, we are trading higher time frames, and then I saw a pull back down. I decided to take out this trade, to take out all the profit I had left, because I'd moved my stop initially to the 1-to-1, because I knew, okay, there's a lot of momentum build up, because if this build up gave a higher push up, then I was just going to move, sorry, excuse me, I was just going to move my stop just below that build up. But because it gave me an engulfing candlestick breaking out all this volume collection, yeah, I decided, let me take this out for now. Though I'm still anticipating that with this build up, there may be a further push to the upside. Just let's look at that, but we shall look at that into the week's analysis. But as you can see, something great is coming out of this, and with the elections getting closer, oh my god, this is going to be interesting. So that is it for the Japanese yen. Just to check out the risk to reward ratio, as you can see, even if we, because one may say that is the full, but even if we look at where I took it out from, sorry, let's just lower the time frame, where I took it out from, the engulfing candlestick, because it gave and then it kept pulling back, but I'd seen a lot of volume in that. So yes, you can say it came out with a 1.79. So that is beautiful for me, but really I still anticipate for another move. I'd love to see it complete itself through. I'd love to see, anyway, we shall see more detail of this in the weekly analysis. For now, this is a recap, so subscribe, tune in more, so that you cannot miss what's coming up next for this week. This week, we've been eating. Alright, so I did not take a trade on this because I've not really understood what's the pattern with it, and also because the zones it's in right now, as you can see, these are zones of the weekly. So there is a higher chance of it reversing than breaking higher. If it does break higher, then we shall have to see from what even the Fed say about the whole, and the Japanese the Japanese central bank, what's going to happen in its fundamentals. Then we can know what you're going to take. But for now, there's a lot of waves here. So I do not think I would love to trade something like this. Even if you can see it's, it's playing around, you could even call it our 4-hour resistance level, but the fact that it's in a weekly zone as well, it's not something I would really want to look at into. Maybe if it gives us a push, then I'm willing to reconsider that, but for now, because it's still playing in the same zones, it broke out, it has come in fully, and it's playing then fully. I'd love to see what it gives out for the analysis when you're making analysis for it, yeah. But it's not something I've moved into my trades for next week, yeah. So this here, however, is a trade I've moved into my trades for next week, the euro against the Australian dollar, and I did not take a trade on this as well, as you can see my chart markups. And then here is where I took beautiful trades. We still have a trade running here, but I took out already 80%. I'm willing to see what it plays out with fully. Sorry, my stylus has dropped here. So yes. Okay, back to the analysis. Yeah, sorry, that was a short. So with this first, it hit my take profit level so beautifully, so beautiful. I loved this, yeah, because I went out. And remember, initially, as I'd spoken, if you watch the previous video, I'd mentioned I didn't want to really get into this trade just by impulse of what had happened the previous week. The one trade we got where it was on the major sell levels, and it was a very beautiful setup to take. So this time around, I took my time, and I got in just after the first push, yeah, because it tested here, and then the moment the markets opened, I think that was the London session, I'm not certain, yeah, it gave a serious push to the downside, and then I held it through. And meanwhile, it hit my take profit or my 1 to 2 when I wasn't even around, yeah. I wasn't even around, because I feel like if it had played around here a little, I may have moved my stop still here, and then it would still rally to my take profit, yeah. Though remember, one thing is I don't do take profit levels, but usually if I come back and it's in depth of profits, I appreciate the depth of profits I usually take. For example, you would look at this, and I would see like it has played out so much and is giving an engulfing candlestick back to the upside here. Then I would literally take that, because there's always moves coming, yeah. So when it pulled back later, I added into another trade. Why? Because it was retesting weekly levels, and what has it given us? It has already given us close to a 1 to 1. So yes, that's why I already took out 80%. If you know my trading model and how I trade, that's what I always do. So just to look at the remainder. So those are what I took for the week. 3 trades, 2 pairs, all wins, no loss. A total risk to reward ratio of about 5R. Last week we had 1 hour, so we are literally like 6 hour up for the month. You feel me? If you needed to pass your challenge, I think you'd already be almost halfway if you're not like doing the old models we started with that was hitting 10% targets, yeah. I feel you. So you'd probably be almost done with phase 1. That's if you're risking. Unless you're risking like 0.5% to 1%, then that would be a little different, but this would be amazing. For a person risking 2%, you'd be done. I don't recommend that for prop firms, and literally if I'm to talk about prop firms, I do it a little differently. For those who know, for those who don't, maybe you can reach out. I'll tell you and let you know of how I approach them differently. Follow my channel. So just to complete again, the date today is the 27th. We were looking into the recap for this week. We had 4 pairs. We took only 3 trades out of the 4 pairs. We got a total of 5R. The instruments we traded was the JPP, JPY, and the Euro USD. The trades we've moved into the next week is Euro against the Australian dollar. This is how we do it together on this channel. Subscribe, follow in, make sure this information is very, very purposeful and useful to you. Thank you for tuning in. Capital signing out.